Okay, good afternoon. I'm Peter Towers, Managing Director of ESS BIZTOOLS. Welcome to 7 Facts about crowdsource funding equity raising. Do you want to create some new income streams? If so, your firm needs to be proactive, needs to be innovative. Do you qualify? Your firm needs to be open to new business ideas. And there's plenty of them out there at present, isn't there? Or if you haven't had a good look lately, perhaps you should spend some time just having a look at the internet. I've been looking at who else is out there calling themselves crowdfunding type businesses in Australia, and there's quite a number of them. They're not all there for equity raising, though. And what we're going to be talking about today relates to crowdsource funding equity raising under the Corporations Act. And you need to be committed to helping your clients build a future for their business. And I don't mean just doing tax returns, but really acting as a chief financial officer to guide your clients through. So hopefully you want to create some new income streams. Crowdsource funding equity raising will assist committed, proactive accounting firms to create a range of new income streams. And some firms have already benefited around Australia. And that's great because crowdsource funding's been available for small proprietary companies since the 19th of October 2018. And it was available for unlisted public companies from February 2018. It got off to a slow start because the government had already announced that its intention was to enable small proprietary companies to be able to raise capital direct from the public. And that caused a lot of people to wait for that legislation to be finalised. It just took a bit longer than what a lot of people thought it would to finally get through Parliament, but it became operational from the 19th of October 2018. Let's look at the scorecard because at ESS BizTools, we are preparing a scorecard which we're updating every week to feature the monthly figures so we can compare from the 19th of October onwards. So we're doing it around the 19th, 20th of a month. This is at the 22nd of February. $23.1 million has been raised and 27 companies have been successful. There's at least another 27, probably 30 companies currently listed on intermediaries' websites attempting to raise capital. Are any of them your clients? Are any of the 27 companies that have raised $23.1 million your clients? If so, congratulations. But I suspect many of you are watching this trying to get ideas as to how you might be able to communicate with your clients about this whole new phenomenon. So let's look at some of the businesses that have already raised capital. Perhaps this will give you an idea of some of your clients that might be interested. Craft beer manufacturers, technology to supplement livestock, 100% digital bank. That company's raised just on $5 million. Premium socks and underwear. Digital platform that matches moviegoers with empty seats. A gin manufacturer. We're good on alcoholic drinks getting support under crowdsource funding equity raising. An app to book last minute schedule childcare from local minders. That's an interesting one. Global currency app and prepaid Visa card. Investment in a gaming brand that could have just as easily been any type of business. Another beer and wine manufacturer. A leading soccer brand producing soccer balls and soccer clothing. An Australian take on modern Japanese fusion. A flat water bottle designed to fit into your bag. These are the companies that have raised the $23 million so far. A timekeeper luxury brands with Australian-inspired crowns. And a proactive mortgage solution. A mortgage securitization blockchain. Talent discovery software platform. Solution to disposable coffee cups. They raised about $800,000. A mobile asset holding. And technology to halve construction time. Energy retailer for solar households. A mining incubator and project initiator. That company raised $4.2 million. 3 fairly young guys with degrees in mining, geology, have raised that money to undertake mining projects in Greenland. A food hub, an urban adventure hub, an energy retailer. You got any ideas as to which of your clients could be one of these types of businesses? Someone said to me the other day that for crowdsource funding, you need a fan base. Well, I think that might be partly right. It's good if the company has already got some customers and is out in the marketplace. But a startup could go down this path. But every company that's going to be successful in raising capital will need to be able to tell a story. They will need to be able to communicate. And they will need strong accounting support and advice. I think it's a win-win. It's definitely a win for you as accountants or business advisors because it's going to enable you to diversify your firm, to undertake more advisory work. And isn't this what the profession's trying to achieve? The Financial Review's been running a series of articles analysing the top 4 firms, the big 4, and then the top 100 firms of accountants. And the general story is that they are all moving towards more advisory services. Well, you want to know what is probably the biggest advisory services available at present for small and medium-sized accountancy firms in Australia? I think it's crowdsource funding. You ever think about it? Do your clients really look forward to going off to the bank and trying to borrow money? It's going to be fairly difficult at present, isn't it, after the Banking Royal Commission? So I think there's a great opportunity for you, but you need to be proactive. The clients might not just come and talk to you. They may have already gone off and talked to someone else who they think is interested in this area. It's definitely a win for your accounting team because they'll be involved in new, varied, interesting work. Incidentally, I should have told you at the beginning, a couple of things. Housekeeping, I suppose. If you've got any questions, please type them in and I will answer your questions later in the webinar. Secondly, if you are sitting there writing or typing what we're showing on the screen, I should have told you before, we're going to send you the PowerPoint slides this afternoon, so you'll have them. And we're also going to be sending you a link to this webinar recording, which will be available on YouTube. And you'll also receive an executive summary of this webinar and a couple other things which we're going to talk about later on. So I think the win for the accounting team is that your team of accountants will have the opportunity of doing some work in a new, varied, interesting field. Not every day are they going to help a company get ready to be able to raise capital. And there's going to be a win for some of your clients. Obviously, this legislation doesn't apply to all of your clients, and some of them will not be interested. But it enables those who are interested and willing to go through the process, who have a good business, to reorganize their finances, to take advantage of this new market opportunity that's available to them because the government has amended the legislation, amended the Corporations Act. But this is a 35-year event. Crowdsource funding represents the biggest improvement in business financing for small and medium enterprises for at least the last 35 years. What happened 35 years ago? The younger ones might not know. The older ones, well, you might have remembered. But 35 years ago, Paul Keating, as Treasurer, introduced Section 708, which enabled companies originally to raise up to $1 million and only approach 20 investors. Some of you might remember that. But then John Howard, 6 or 7 years later, as Treasurer, changed that to make it that under 708, you can raise up to $2 million in a 12-month period, and you can have 20 investors in that process, but you can approach as many people as you like. Now, that was the event 35 years ago. I think the crowdsource funding legislation has the potential to surpass that on its effect on Australian businesses. And 708 has been a very successful section in the legislation. So let's look at the 7 key facts that I think will assist your firm to diversify in the marketplace, in your marketplace. Crowdsource funding's already proven. It's already well and truly in operation in the United Kingdom, the United States, Canada, and New Zealand. These countries signed up for crowdsource funding equity raising 6 or 7 years ago. I don't know why it's taken us so long, but we're finally catching up to the major Western countries. Fact 2, it's available to small proprietary companies, and this is a very significant change. Group turnover under $25 million per annum. Please note the word group. It's not just the company that's trying to raise the capital. Group gross assets under $25 million. No member company listed on a stock exchange anywhere in the world. And no member on a financial market. And it's not being used just to create a credit facility. Now, they're the 5 legal rules. So if your client complies with them, we're ready to move on. How many of your clients fit that category? You might find that you've got a lot that fit that criteria. Fact 3, substantial work opportunities for accountants and business advisors. Very important from your point of view. And what are you going to do? Well, the role will be to brief your clients on how crowdsource funding equity raising operates, including the role, responsibilities, and powers of intermediaries. The intermediaries are the gatekeepers. That's what our current Prime Minister, when he was the Treasurer, described the intermediaries as when he introduced the original legislation. So your clients need to understand how this whole system operates. Your clients are going to need assistance in negotiating with intermediaries. There are now 13 intermediary firms in Australia, and they are spread around Australia. Your client doesn't have to deal with the one in Sydney or one in Melbourne or one on the Gold Coast. They can pick who they want to work with. And some of the intermediaries have got preferred industry groups that they want to be involved in, whether it's agriculture or manufacturing or health related matters. So you need to have a look at that. And your clients will need assistance, some input when it comes to appointing the intermediary, because the legislation doesn't specify what the fee that the intermediary can charge will be. And so the intermediary can negotiate their own fee with your client. And each intermediary is adopting a different style. That's very obvious if you go onto the website and start looking at the individual intermediaries, how they're promoting, how they're producing videos and webinars, and the general promotional activities that they're undertaking. So your client needs to be happy that they're going to be able to work with this intermediary, because their immediate future is really in the intermediary's hands, and they can only have one intermediary for any one capital raising. They're going to need a business plan or a list of key information relating to the business. So I thought I'd better show you what I meant by that. So they need some information about the industry and the products and services within that industry. Comment on customers and the team, directors, and the location. Is the website up to date? And does it really tell the picture? Summary of the intellectual property position. What is the client's unique competitive advantage? What sets them apart? And they need to be able to summarize their current financial position. Fact 3. They also need budgets and cash flow forecasts. And there needs to be a determination of what the strategy is relating to capital raising. How much capital does the company directors believe that they need? They need to be able to then clearly identify what they're going to spend that money on. And that has to be included in the offer document. How many shares are going to be issued? Which really brings up the more important question: what is the share price? Is it 25 cents? Is it 50 cents? Is it $1? And how does that then equate to the percentage of ownership that's going to be available for those new shareholders, both for a minimum subscription amount and for a maximum subscription amount? These matters all need to be determined prior to having a discussion with intermediaries. And then they will be looking for your assistance to prepare the crowdsource funding offer document. This is a de facto prospectus. The government hasn't called it a prospectus, because otherwise it would have had all the legal ramifications of being a prospectus. It's an offer document, but it also requires a lot of attention to the legal segments, and then obviously the story about who this company is, what's it going to achieve, who are the team, who are the directors. And as part of your role, potentially at the end of this process, you may be able to gain the appointment as the virtual chief financial officer, because you have a good idea of how this company works. And if they've been your client on a traditional basis, you probably already know a lot of information about this company. Because even though these companies are going to the market to raise money, many of them are not interested in raising enough capital to employ a full-time CFO. And indeed, they probably haven't got enough work for a capable full-time CFO. But they will need current, up-to-date financial information every month, because they should be making sure that their board of directors structure and their key management team meetings are set in place, and that the financial reports, the operational reports, are all going to be submitted to those meetings every month. Let's look at fact 4. I think the vast majority of the businesses that seek to raise crowdsource funding, equity raising, will currently be clients of small, medium-sized accountancy businesses all over Australia. I've emphasised the word currently. These clients need assistance from their current trusted advisor, you. But if you don't give them that assistance, and you do not, in a proactive manner, communicate with them to indicate that your accountancy firm is committed to being able to assist them on this journey, then the ones who have read about crowdsourced funding equity raising, and a lot of small and medium-sized business operators have, you might find that they go to someone else. And you might retain the taxation work for a while, but then after that, you'll probably lose that as well. Your team will be happy. Fact 5. They're going to have a new role as business advisors, not just tax return preparers. And it's going to be more interesting and varied work. I know we've still got to do tax returns. It's an important part of the cash flow within accountancy businesses. I know that. I ran an accountancy business for many years. But it's nice to have 30, maybe even 40% diversification of doing some other work. It gives your team members variety, creates interest. I think they'll get professional satisfaction and it will build up the team morale. And more importantly, I think it will help you with your retention and give you an advantage in the marketplace when it comes to trying to attract new and enthusiastic team members. I'm just checking to see if there's any questions. There's no questions yet. Don't be shy. If you've got any questions, please type them in and I will answer them during the webinar. I'll check again in about 5 minutes. Fact number 6, I think your clients will be happy. They will appreciate your firm's worth to their company. You know, clients do not really see value add from the preparation of tax returns. Over the years, I cannot remember too many clients that bought me a bottle of wine or shouted me out somewhere when I produced tax returns for them, the annual accounts and the tax returns. But I got a fair bit of those rewards from clients over the years for business plan work, for helping them with Section 708, by helping them raise significant government grants. Clients see value in that. So I think you'll find that your clients will be a lot more appreciative of your firm's contribution. And the other very important factor, I've had some accountants say to me, "Oh, but Peter, we don't know anything about this." Well, neither does anyone else in Australia, really, when it comes to accountants. This is brand new. Now, some firms may have had some experience with it in the overseas countries or particularly in New Zealand. But most firms in Australia have got no experience in this. Some firms, of course, have done some work under Section 708. But why can't you? Why can't you get involved in crowdsourced funding equity raising? It gives you the opportunity to grow with your clients. And we've got a whole program which will assist you to be able to render those services to your client. And fact number 7, some of your clients will be able to raise capital without having to give security to a bank or some other financial institution. They won't have to give personal guarantees and they won't have monthly repayments of principal and interest or just interest only to be worried about. They will have equity capital. Now, sure, a percentage of the company is then going to be owned by external investors. But there's not much chance that those external investors are going to give them any day-to-day operational problems, as some people have asked me about. The maximum investment is $10,000 per company per annum that a retail investor can make. So if a company's going to the market to raise $500,000, it's going to end up with probably over 100 shareholders, because the average capital raise at present in Australia in those 27 companies is around $3,500 to $4,000. Some are obviously contributing $10,000, but others are only contributing $100 or $200. So how do you go to take advantage of all this? Overall, I think it's a win-win situation. For your clients, they've been able to reorganize their finances. For your team, they've got a variety of interesting work. For your accountancy firm, you have a range of new income streams. You've achieved some diversification. So let's look at now at the crowdsourced funding equity raising product package that we have developed at ESS BIZTOOLS. We've spent a considerable amount of time in the development of this product package so that you are able to utilize it, if you're a subscriber, of course, to undertake the professional advice. And this is just one of 23 product packages that we have developed. The others are on early stage innovation company, chief financial officer duties, personal property securities register, succession planning, debtors management, and other things. So the first thing we have in our manual is team training material. It's very important that your accounting team get a first class knowledge of what is involved in crowdsourced funding. So our first section deals with that. And then we have marketing and promotional material. Now, someone rang me a few weeks ago and said, why have you got marketing and promotional material in each of your product packages? And I said, great question. And the reason is that far too many accountants, with respect, are not promoting alternative services, advisory services to your clients. We have a consulting business. We do a fair bit of work with small, medium enterprises. And a lot of that is government grant work, where I've been approached by the representatives of governments to see whether we'll prepare a business plan for someone or help them with a management review or whatever. And invariably, once I've got the appointment and we got started, I say to the client, why didn't you talk to your accountants about doing this? Didn't they want to do it? And 9 out of 10 times the answer is, oh, our accountants aren't interested in preparing a business plan or in giving advice on securing a grant. I said, aren't they? They said, no. Well, what are they? Oh, they're good at doing annual accounts and tax returns. And sometimes I've known who those accountants are, and I contact them and say, you know, I'm doing this job, but I think you should know about it, and perhaps you should have been doing this sort of work. Are you telling your clients that you're interested in this work? And invariably I get a mumbled reply, or we probably could have done it better. I said, I think you could have done it better because your clients don't know. So what we've done about that is in each of our product packages, we have marketing and promotional material to help you communicate with your clients. So what do we include? We have a webinar that you could place on your website, but reproduce it, please. We give you the whole material, including the list of the discussions that we've had, so you can produce your own. We have a video, and the same thing. There's a video, but please reproduce it yourself so you can place that on your website. We have a news article you can send to your clients and prospects. We have an article you can send to your local media. So it's very important that you promote what you're doing, and then you keep that website up to date with an ongoing client's approval. Perhaps have some stories about clients that you have helped on this process. That's a few months down the track, but that could help. We include quotations and proposals because 10 years ago when we started down this path, some firms were asking us about what they should put into a proposal. So we started writing them, and now each of our product packages has a quotation and proposal section. You can use it if you wish or develop your own. And then we have a series of articles that throughout the process, we're going to be suggesting to you, you supply to your clients. You badge them with your firm name on them and make them available to your clients, because it's very important that your clients have a clear understanding of how all this process works, because this is all new to virtually every one of your clients unless they've done a lot of reading on the internet. There is some corporate governance concessions which applied to a unlisted public company that had been approved as a crowdsourced funding company prior to the 19th of October 2018. So you probably won't have too many of them to worry about. And then we get round to the actual delivery of your professional services. Is the client eligible? We've got some material there to help you determine that. Is the client interested? See, once you go through the eligibility and start making some of this information available to your clients, and they realize the amount of disclosure and information about their business that they have to do, some might say, oh no, it's not for me, thanks. Okay. Step 3 is making sure they do understand this level of disclosure that's required. Who are the investor categories? And what's the rules relating to investors? I told you before, the $10,000 upper limit, but there are some other rules relative to investors. It's very important that your clients understand the role of the intermediary and the process you're going to go through with contacting the intermediary and the selection of the intermediary. We have some checklists there, some questions we'd suggest that your client and yourself make sure that you get answers to from the intermediaries. How are they going to work with your client's directors and senior managers? And then we have complete templates to assist you to prepare the crowdsource funding offer document. We're imagining you'll be preparing it. Not many clients are going to be able to prepare this sort of document. And then you'll be able to finalize that document in conjunction with the intermediary. The intermediary will want to see that document as it is produced, because they will be making some input to you. Intermediaries have got a very interesting role. They are acting as the gatekeeper on behalf of ASIC, but they are also promoters. They each have 20 to 50,000 people, businesses on their databases, according to each of their websites, who are their potential investors. So they want to make sure that this company that they are going to allow to go onto their website for the 90-day duration of the offer has had the best opportunity of putting together an outstanding document, because they want to make sure that they've kept the good faith relationship with their investors. And then what's involved with going live on the intermediaries platform? We discussed the communication channel and the requirements for the directors and senior managers to be available on a day-by-day basis for the 90 days to make sure any questions that any potential investor has asked are answered. Because the intermediary won't be able to answer 95% of the questions. They will be expecting the company directors and senior managers to do that. So your clients need to understand this. There's also some procedures that have to be adopted if a clause in the offer document is found to be defective. What happens? So we discussed that, so you have a process for sorting that out. Because if it's very serious, your offer will be suspended, and you don't want that. That's not going to create a favourable impression in the market. And step 11 is closing the offer. What happens? The intermediary communicates and says, your minimum subscription was 500,000. We've raised 600,000. We're now going to transfer the net amount of the money after the intermediary's fees to the nominated bank account, and we're sending you the list of your new shareholders. You got 185 of them, so share certificates got to be issued, and a return of allotment of crowdsourced funding shares has to be submitted to ASIC within 30 days. And that was really part of the post-capital raising. So what's in it for you as an accountancy firm? Why am I trying to get you interested in this? I think it's a great diversification of your firm's activities. I think the expected fees you could look at for this is $1,000 to $40,000 to cover the matters we've raised. Now, I've now got a question which oh geez, there's a few questions here. Okay, sorry, I missed some of these. Sorry, I'll answer the questions in a moment. I'll just finish this slide if I can. For your accounting team, there's great work experience. And for your clients, they can raise finance from business operations without having to mortgage the company's assets or someone else's property. Now let's just look at some of these questions, and that's great. I love questions. If we have five separate legal entities, can these be grouped and equity raised by a holding company, which in turn owns the shares in the SLEs? As long as it's a group and the group turnover is under 25 million and the group assets are under 25 million, I think the answer to that is yes. I haven't quite worked out what SLEs are, but I presume you're talking about this company structure. But it's a question you probably got to pose with your lawyers and make sure your lawyers have got a working knowledge of this legislation. If I find out any more, I will answer that in the material that's going to come round to you after this webinar. Do you need to give potential investors, equity holders, a guaranteed rate of return on their shares? No. There is no requirement for that at all. In fact, ASIC is frowning at detailed financial information being made available. This is not a prospectus. Can equity being raised be used as it is raised, or do we need a minimum raise before it can be accessed? E.g., if we want to raise 2 million to retire debt and raise 100,000 quickly, can we use this? The answer to that is no. You have to run the period. So if you needed $100,000 quickly, I think what you should be doing is putting the offer document into place, going through this process, raising the 100,000, doing that, and then going back. You can raise up to $5 million in a 12-month period. I mentioned in the summary that a digital bank has raised $5 million. They raised that in two tranches. The first one they raised about just over $2 million, and the second one they raised around $2.9 million, making the $5 million within the 12 months. It'd be a good idea to tell the intermediary what you're trying to do, and this is part of the communication with the intermediaries. Whilst crowdsourced funding is potentially new to them, although at least two of the intermediaries have also got operations in New Zealand, so they understand what's been happening over there. It's a good idea to communicate with the intermediaries. The other intermediaries, most of them seem to have experience in general capital raising, whether it's an IPO, Section 708 capital raising. So they're experienced operators. That's why they've got these licenses. And just I saw the other part of your question there. You cannot get any of the money during the process. You have to go to the minimum amount. And in fact, if you've got a maximum amount and you continue on, it's when the maximum amount is reached. So that's part of the deliberations. You don't have to have a maximum amount. Your minimum amount could be your amount. Once you raise that, within 48 hours, you would have that money in your account, 48 hours after the amounts raised. What do intermediaries recharge? Average, good question. The figures I've seen are 4%, which is for a company that was attempting to raise $4 million. but the average seems to be around 6 to 8% of the capital raised, or it could be shareholding in the company. And a number of them are charging startup fees or mobilisation fees. Now they're relating to fees to get started. Whether some of them are rebating that if the capital amount is raised or not, I'm not sure, but that would be one of the questions I'd be raising with the intermediaries. Sure, they might want $10,000 up front, but if you're trying to raise $1 million and their fee is going to be, say, 6%, so they're going to earn $60,000, perhaps you can argue with them that if they do raise the $1 million is committed, that in fact the fee would be determined after the advance amount's been deducted. But that's up to you and your clients to negotiate with the intermediary and then make sure it's in the agreement that has to be, that you should be finalising. I'm just trying to find separate legal entity. Oh, thanks. That's what SLE was. Thank you very much. Now, the next question, thank you, is does the raise need to equal an approximation of the value of the company, or can the raise be over and above the value of the business it would be used to fund further acquisition, growth, etc.? What we're going to have is a pre-issue value to the company, and obviously the capital's then been raised to go to it. So it hasn't got to be constructed as being a percentage of the company's current value. It really gets back to what you're going to use the money for and being able to identify that. Obviously, the current directors and shareholders will have some concerns about what percentage of the company is going to have to be allocated. So in many cases, you will need to get your housekeeping in order before you start this process relative to the issue of shares to the current shareholders. There's a lot of companies, of course, have really only got 100 issued shares, and that will need to be reviewed. But that should be in relationship to what the net worth of the company is in its current situation. Otherwise, the offer you're going to be making to the investors will probably not be attractive enough to them. So this all needs to be thought through and calculations made. And that's really your role. But the law doesn't stipulate anything relative to that. Okay, I enjoyed that. That was a good group of questions. Thanks. If you have any more, or if any of you didn't think I answered that fully enough, please just put another question in there. We will be summarising the questions in the material we send around later on, and obviously we will give you the responses. Some of you might be aware, because I see in our list a few of you have attended some of our earlier webinars on crowdsourced funding. We have now at least 3 webinars in this series, and we've tried to follow on one to the other as we work our way through to this interesting position we're now in, where the capital raising's actually underway. So we had the first webinar, and if you want to watch that, you can do so by going to YouTube, and this YouTube address will be in the PowerPoint slides, and obviously the webinar recording that you're going to receive this afternoon or tomorrow morning. And then we had the second one, which was presented a few weeks ago, helping your clients raise capital painlessly. The same thing, we're giving you access to go back and look at that webinar recording. So let's look at what our proposal to you is. We've developed this package to assist you to be able to advise your clients on this journey. The normal subscription for the standalone crowdsource funding package is $999. That is 24/7 access per office. We've got a special New Year discount which we've agreed to extend to this time of the year. It's a 40% discount, which means the adjusted price is only $599, including GST. That gives you 12 months access. And that's available until close of business 28th of February. So that's tomorrow afternoon. We're not going to be too concerned. Our website has been adjusted to take until Monday, but that's when we are closing this special offer. So $599, you can get access to the crowdsource funding product, which is what I've described to you today. Or you can subscribe to our ESS BIZTOOLS Gold package. Now, that includes everything we produce. It includes crowdsource funding, includes 22 other product packages. I mentioned some of them to you earlier, but it includes access to a monthly newsletter and a whole range of other activities. That normal subscription works out at $3,141 per annum in monthly payments of $261. Or we do have an upfront discounted price of $2,970, including GST. But with the discount, that has been reduced to $1,782. And again, that closes on the 28th of February. So we'd like to hear from you if you are interested in getting involved in this process. To subscribe, please go to our website, www.essbiztools.com.au, and you will need to insert the codes. So the crowdsource funding, CSFC40, and again, you'll have the PowerPoint slides later this afternoon or tomorrow morning. And if you want to take advantage of the upfront discounted price for the gold package, it's GOLDY40. Or if you're going to pay monthly, it's GOLDM40 to get those packages. During these webinars, we've had a few managers, I suspect, approach me and say, oh, we've now got to go and prepare a submission to go to the partners. Have you got anything for us? So we decided to prepare them. So we have prepared a template for the crowdsource funding equity raising package and one for the gold package. So it's a submission we've prepared as if it's going to a board of directors or a partners meeting, and we will be sending you the link to those templates in the package we're sending you after this webinar. So if you wish to use them, please do so. If you want to just read them to see what we're talking about as far as what's in our package, please do so. Can we now talk about your action plan? Are you interested in creating new income streams for your accountancy business? I hope you are. And offering your team the opportunity to work on interesting and varied work? And offering a fantastic proactive service to your clients with a heavy emphasis on the word proactive? Don't be reactive on this, please. I think there's a great opportunity. So I hope you are. So your next steps, you can subscribe to our Gold Source funding package or our Gold package, which includes all of our material. Part of this offer on the crowdsource funding is a 60-minute mentoring session for you and your colleagues in your firm on crowdsource funding. So book your time for that, because I'm trying to limit to 3 one-hour sessions a day, so they're running out fast. Complete the client matrix. We have a client matrix which includes the 5 legal questions and then 10 other suggestions that we have on what the business might be doing and what it might want to try to achieve, so that you can determine whether they are potentially interested in crowdsource funding. Read the seminar material. Very interesting, but very important that you read that. And then plan the seminar webinar, because our suggestion is after you've used the matrix, You identify who those clients are and invite them to a seminar or a webinar. It will take about 1 hour. And then you can then approach your clients after that, or prospects, to see if they're interested. You can place the promotional material that's included in the package onto your website. You can personalize the media release and send it out so your local community knows that you are being very proactive. Telephone the media that you're sending it to see whether they want any further comments. I started to say this before. Then follow up the clients and prospects who attended the seminar webinar. This is very important. You need to follow them up. Give them a ring, have a cup of coffee. What did you think about crowdsource funding? Are you interested? Now, obviously, if they say no, that's their decision. But if they say yes, the proposal should then be prepared and you'd sit down and have a discussion with them and then get started on this whole process. But obviously, in the proposal, you will need to clearly identify what's going to get done. Bearing in mind the financial account information that's included has to be prepared up to a date no longer than 30 days prior to the offer document date. So it's very important that the documentation is followed through. And I was just checking then to see if we're going to need more questions. So I will skip across to them because I think that it's very important that we answer the questions. Rather than issue shares, can we issue gift certificates or memberships to the business? The legislation says that the investment is for ordinary shares in the company, but there is no prohibition about shareholders receiving some additional benefits. So if you go onto some of the intermediaries' websites, and in our material there's a list of the intermediaries, you can see that some of the companies are offering additional benefits. Some of them are geared to the shareholder contribution. So if you contribute $200, you get something. If you contribute $1,000, you get a better package. If you go $10,000, you get a pretty good package. But that's an addition. The key part of the legislation is that they have to get ordinary shares in the company. I think it's important that you refresh your website with material that we're sending you and send occasional media releases to your local media. And during the 12 months, this first 12 months, we will be sending out new information. We have developed this crowdsource funding scorecard, which we're updating every month. And at this stage, it's been made available on our promotional section on our website, so for crowdsource funding. But from the end of the March, it's just going to be part of the subscribers area. So only members will be able to see that, because hopefully we're going to get our targeted number of subscribers by the end of March. We don't believe that every accounting firm in Australia is going to be interested in this. We don't believe there's going to be enough work for every firm in Australia. It's not like taxation. So our aim is to get 500 firms committed to crowdsource funding, because when we talk to the intermediaries and look at their projections as to what's going to happen in this market, which a couple of the firms believe within 4 years will be at $1.5 billion per annum capital raise, we believe 500 firms will be able to service that market and achieve your income levels that you would require for that. So thank you for your participation in this webinar today. Thank you for the questions. We're going to send you an executive summary of this webinar, which is a one-page summary that you might like to pass around to your colleagues. Or if you are a manager and you've got to report back to partners or someone else above you, mightn't be a bad idea just to give them the one-page summary. That's what we've prepared it for. You'll get a link to the webinar recording on YouTube. You'll get a copy of the PowerPoint slides. And you'll get the templates that I talked about earlier relative to the submission to partners or board of directors if you need assistance with that. Our contact details, there's my telephone numbers. You can use either of them. Obviously 1-800 is a free number, or you can send me an email, peter@essbiztools.com.au. We have a number of websites that you're most welcome to go to. In fact, I would really like you to go to ESSBIZTOOLS.com.au. It's broken into two main sections. The first section that you will come to is the promotional material for people like you. For our subscribers, they have got a password which gets them access to the members only area. We have a separate website to identify government grants that might suit individual businesses. There's hundreds of government grants. This is a big income area for a lot of accountants around Australia. We also have a small business website whereby we're trying to inform small businesses and then encouraging them to go and talk to accountants that are on our list if their own firm of accountants is not able to or willing to help them in this area. The last thing I want to do today is to say Happy New Year. Might be a bit belated, but we have called this a New Year presentation. This is our last New Year presentation. I do look forward to hearing from you. We would really like to welcome you as subscribers to our crowdsource funding equity raising package, or indeed our gold package. If you think of any further questions this afternoon or tomorrow or next week, please send me an email, peter@essbiztools.com.au, and I will get back to you. Please remember our special extended discount offer of 40% discount does expire 28th February. We are going to allow a few days leeway, so by the end of the first Monday in March, that's when we will be closing that site down for those 40% discounts. So please take advantage of it, and then we will then contact you to book you in for your complimentary 60-minute webinar briefing for you and your colleagues on your firm. Just before we go, I will just check once again to see whether we've got any more questions. Thanks, Troy. Troy asked a few other questions and left me a thank you note. Thank you to all of you. Thank you very much. Have a great day. Goodbye.